Whether you're building dynamic network models or forecast.
Hello, welcome to Tuesdays with Lloyd. This is your host, Enya. Today's session is the series finale of our US Casualty Showcase, featuring 3 speakers: Alison Timson of AXA XL, Ed Wallis, Inigo Insurance, and Philip Titley of Price Forbes. This is an interactive session, so please ask your questions using the Q&A tool. Without further ado, please welcome Ali, Ed, and Philip.
Hey, and great, Enya, thank you for that very much for that introduction today. We have a finite amount of time, so we're going to try and whiz through it. Thursday clearly is the new Tuesday, so we're all excited to be here. Ed has basically had 15 plus years in the insurance market, more recently heading up the liability at Inigo on the liability side, and Alison is at AXA XL with 20 plus years of experience. So what I'd like to do is that the topic, as we all know, is the changing face of transportation risk and how to approach it. We've got some topics we like to talk about, we're going to throw out now. And I'm going to sort of kick off the session by throwing a question to Ali, if I may. Ali, what areas of risk do you feel have become more challenging to underwrite in this world we live in?
There are quite a few things we're focused on at the moment, and they're all quite diverse. I suppose the most obvious, and one that will have been touched upon in recent sessions, is auto claim severity caused by, I guess, nuclear verdicts and social inflation, which I'm sure everyone on the panel is very familiar with the causes. So I won't belabor the causes of claim severity, but I suppose it is important to mention that it is something that our clients are very focused on, and we do very much value the information they give us about how they're trying to manage down severity. Number one, avoid claims, and we're going to touch upon further in the presentation about how they're doing that. I suppose avoiding claims is the most important thing. If you can't avoid them, how do you then handle them to get the best outcome to try and reduce severity in a world that's seemingly gone a bit crazy? As you know, the point being, past 3 years, 19, 20, 21, the largest claims ever recorded in the auto space just continue to increase. I think 2021, we saw a $730 million verdict for a single plaintiff, which seems kind of nuts. So obviously everyone's very focused on that. That's I guess the number one thing we're focused on, and is a really big challenge. I guess specific to the rail space, a lot of our rail clients have seen large reductions in their passenger numbers, 90 plus for a majority of our clients throughout 2020. Very trying for them, given that they still have to maintain operations, they still have to make sure they're keeping the system safe, but obviously are getting much less passenger revenue through the door. So we're very focused on supporting those clients and trying to be fair in their renewals. It is a challenge because often it's hard to project exposure, but just trying to work with clients to try and give good outcomes, especially for rail clients, which a lot of our rail clients we've had for many, many years. And it's important to make sure that we treat them fairly when they're having difficulties. Something that's not specific to the transportation space, but does affect quite a lot of our rail clients, is police professional. Obviously, the tragic killing of George Floyd drew attention to excessive force. And I think that we were concerned about how this would impact claims in that area. And we haven't seen an increase in frequency, but we are watching severity, because quite rightly, the public are very concerned and very passionate about that specific issue. And obviously, as we know, that can go into jury pools and create sometimes unreasonable verdicts, even though the situations are quite upsetting, but the verdicts are often out of whack with the reality. The other thing we're very focused on, again, not transportation specific, but does affect some of our clients, is SML, particularly in the rail space, I guess, trains late at night, stations that have areas where there's not much footfall. But we are addressing that with our clients, and they're all very aware of it, and they're doing things like increased lighting, putting more people in the stations, and making sure there's more video surveillance. Driver attention in the heavy auto space, big problems, been a problem for a long time. Some quite shocking stats, I thought. 2021, 80,000 driver deficit, expected to go up to 160,000 driver deficit in the next 10 years. No wonder, I guess, they're looking for alternatives in form of autonomous vehicles and other ways to kind of meet the demand. We're also hearing that a lot of the long haul clients are struggling to keep drivers because they're moving towards shorter haul and local deliveries, for example, Amazon, because it allows a lot of flexibility and able to return home at night, particularly during the pandemic when people wanted to be close to home. There seemed to be a big movement from long haul to shorter haul routes. E-bikes, e-scooters, I nearly get run over by them on a regular basis.
Yeah.
I can see the demand. I mean, pollution, climate change, you can't park in big cities. People want alternative forms of transportation. It meets the demand. From an insurance perspective, I suppose it's a little bit untried and tested. There's a lot of new startups out there developing technology, launching in this space. There's a product risk, there's an operational risk. And as yet, we're feeling our way around the claims. Clients are trying to do the right thing, very much so. They're trying to, via contract, push liability back to the users, who often, it's not the technology that's the problem, it's the user that's the problem. And trying to rely on the Braves Act, which I don't think potentially will hold up, but it's not tried and tested from what I believe. Last mile delivery, which I think very much has grown larger during COVID, where people couldn't leave their homes to get pharmacy, groceries, pick up deliveries. So they were using companies that just went the last mile and picked them up for them, which seems in theory quite a low exposure because the mileage is low, but most of this exposure is in urban spaces. And the idea is that deliveries are fast, so it does have its own exposure. OEMs, obviously hybrid technology, electronic vehicles, all great. A lot of it's been around for a long time, but constantly pushing the boundaries of technology and developing technology. So the latest version of is then untried and untested. So there is a product liability exposure there that we're monitoring. I mentioned autonomous vehicles earlier. It is a very exciting space. I always like to listen to the technology companies talk about the exposure. It's a lot of OEMs, it's a lot of startup tech, it's a lot of universities getting together to try and develop autonomous vehicles with an aim to make the roads safer. There's, in the US, there's level 0 to 5. Currently, there's no company at stage 5, which is full autonomy, which means that you have no steering wheel in the car, you have no brakes, you have no way to control the vehicle. But there are companies in California driving passengers with some level of autonomy, and there's a proposal to extend that to trucks, delivery companies, etc. I think we seem to be a fair way from full autonomy, but there's obviously a massive drive and massive incentive to get there as soon as possible. I don't know if you heard, Ed, recently, platooning, which I thought was quite interesting, where a lead truck with a human is followed by an autonomous truck, and it mirrors the behaviour of the lead truck. which seems an interesting way to delve into autonomy without full autonomy. Obviously, there is an element of human error then involved, but I suppose it's a good way to maybe test autonomy and how that works. And I suppose the last thing I had to mention was wildfire. In the rail space, rail grinding, accident response. Our insureds are definitely focused on it in California and other Western states. They follow the grinding trucks with vehicles that spray down the vegetation. They're involved in vegetation management, and they're making sure they're focused on accident response in the event of a fire.
Well, I think Ali, you're completely correct on all that. And I think so interesting is when you you look at the title of what we're talking about today and like Philip's original question, and you kind of think, well, transportation, that's just like trucking and rail. But as Ali's Ali's eloquently kind of just said, that it includes like so many new technologies now. You've got AV, you've got e-scooters, e-bikes, as you said, and you've got the sharing economy type thing with Uber, Lyft, etc. And so it's become such a broad topic because of all the societal change and technological change we've had. And so I think while some of the newer areas are, we're still learning how to underwrite, to be frank, and with some of the older areas, there are definitely other challenges as well. And so I think we are, definitely trying our best to do it as a marketplace in London, and I think obviously in the US and Bermuda as well. But I think it's a fascinating area of the market because it's one of the areas where we're seeing the most change.
Well, that's quite an extensive list, to say the least.
You should have cut me off sooner.
Yeah, no, sorry, Ali. No, thank you very much for that. Moving on to you, Ed. I had a question sort of within the trucking space and particularly companies with heavy fleets. How have you seen them generally addressing the rise in auto claim severity?
Yeah, and I think that rise is well known, and it's been damaging to those insureds and to the marketplace for the last few years. Ali kind of mentioned some of the nuclear verdicts that we've seen over the recent past, and it's really concerning. Some of those nuclear verdicts aren't necessarily insured; they're just kind of like headline numbers, which are kind of used by the plaintiff bar as almost like a PR machine, but it's still a problem. And I think there's obviously two things to talk about, and that's frequency and severity. And obviously the best thing for these clients to do is to focus on decreasing frequency. That's the thing which is in their control the most. If you can decrease your frequency, then obviously, there's less chance of having a severe claim. And so we see a lot of people obviously investing in a lot of new technology, in a lot of driver training, driver retraining, and looking kind of at what systems they can put into their fleet and into their, something like, into their training, like Smith system and things like that, and looking at onboard analytics and kind of the coaching around how they can improve the drivers, the human element within that, as well as the physical elements as being the truck. But obviously, crashes do happen, and we haven't seen the drop in frequency that you might expect to have seen during the pandemic. I think people kind of thought less, people working from home, less things being moved, less cars on the road, but there really has not been a marked decrease in frequency, which I think has been surprising. And the severity continues. I think what we're seeing now is people changing their defense strategy. I think there was a time when our clients or truckers maybe being blindsided by various different type of reptile theory, kind of, in terms of the courtroom and the lawyers. And when we talk to clients now, I think there is more aversion to going to court, but that obviously has its own problems. Obviously going to court and having a jury decide, and with all the tactics we all know about, that's one way of action. And obviously some people don't want to go and settle, and for good reason, but it does mean that now the plaintiff bar and people do know that they can probably get away with a higher settlement number. So it's very difficult. Do you roll the dice and go to court with good fact patterns, or do you settle beforehand? And I think what our clients are doing now is they now realize that there's a far greater nuance between those two things, and they're really trying to kind of attack the claim early. and really handle it early and close it as early as possible. Because the longer the claim is open, from what we see in all likelihood, the more severity there will be.
Absolutely. Okay, conscious of the time, we're halfway through, so the time definitely flies. Ali, you did touch on how COVID has impacted the respective industries such as trucking and rail, and I think we're all aware of that. So I'm going to move on quickly, and I'm going to sort of probably throw this question out to both of you, just because of the way it's worked out. Cyber attacks are on the increase. We're well aware of cyber ransomware, particularly, and delving into that underwriting world, and you know, the increases. How do both of you? What do you see as the biggest exposures within the industries we're talking about today, as respects cyber? Ed, do you want to take that to start with?
Yeah, of course. I think, you know, you talk about ransomware, and obviously it's not just ransomware, but you have the malicious attack element as well. And, you know, given what's happening at the moment, obviously close to us in Europe, in the kind of Ukraine conflict, we're kind of fearing at the moment that there might be an increase of kind of state-backed cyber attacks in kind of the Western hemisphere from Russia as part of the retaliation from kind of the sanctions which have been imposed. And I think that's worrying and that would worry. No, that's not just transportation specific. That's across pretty much every single area we insure. And I think that potential increase of cyber attack is kind of quite a real threat at the moment, especially when, you know, we all bang on about the benefits of being connected and the benefits of technology, but that does come with a cost. There is more connectivity, which means that there are more, I suppose, points of failure or points of access where somebody can get into your system. You know, when you look at something like rail and PTC, which has been a multi-year, very expensive operating system to put into implementation to really hopefully decrease the, eliminate, I'd almost say, the frequency of, that type of kind of going through light crash. But that's another system which is now being put in place, which theoretically is a point of failure which could get accessed by somebody. You're looking at the technology we're talking around, around AV and around auto and the trucks, which we kind of all think might be, again, a really positive element to decreasing of frequency. But it does create other opportunities for cyber attacks. And, obviously I don't think anyone who works in insurance probably knows as much as the cyber attack hackers around what they're looking to get involved in and what they're looking to attack. And I think we can offer products to our clients to try and help, and I think try and align with them and try and understand what they're trying to do. But I think it's a massive area of exposure, and it's something which people are obviously trying to contain, but it's just incredibly difficult to do so for some of the reasons I've just mentioned.
Yeah, thank you. Ali, would you like to add anything to that?
I suppose I'd just add, obviously, some of our rail clients are seen as targets, and they are making sure they address cyber exposure. But there is definitely a shortage of cybersecurity talent out there. And I think it's making sure they're attracted into the right venues and supported. I guess, as Ed mentioned, the more we're connected, the more there is potential for cybersecurity failure. There's a lot of wireless technology just coming into particularly the rail space, connecting to control centres, and technology in cars connecting to each other. And all of those points of wireless connectivity are potentially vulnerable. Obviously, Russia, the New York MTA Russian attack, I think it was 21. Luckily, there wasn't any resultant BIPD. It wasn't a big deal, but I know that there were people that said it could potentially have impacted control systems. So there is a vulnerability there. Obviously, we're very focused on it. The rail industry and auto industry are very focused on it. But I guess malicious cyber is a big deal.
Absolutely. No, thank you. So again, sort of moving around a bit, and now sort of concentrating on you know, what makes a good risk from a presentation standpoint? How do we get that message across to you, the underwriters? Me being the humble broker in the process. What submission information do you helps you understand transportation risk generally, in sort of general terms, and sort of fairly quick responses to that question? Ali?
Go for it, Ali.
Go on, Ed.
Go on.
I think, yeah, without going to each segment, I think we're data hungry, and especially in transportation, there's a huge amount of data. Whether or not, if you're looking at, FRA data for rail, which there's a huge amount of online, and you can get access to. But in terms of how we look at risk and how, I suppose, insured should be looking at differentiating themselves, I think is all around data and being able to offer the data to us to be able to underwrite properly and in depth. But then that's one side of it, but the other side is really just like a huge investment in their time, and show it and to explain to us why they are better risks than their peers. It's all well and good around here's a submission, here's some lovely words, and here's a marketing document telling us why we're best in class, which I suppose a lot of transportation risks sometimes say they are, but kind of prove it. What are they actually doing? What's their investment strategy around safety? Why are they better risks than the rest of their peers? Because that's ultimately what I suppose all insured should be trying to evidence, is why they're better than their peers and why they should be getting a better deal from underwriters than their peers. And if that's and I think that's with a level of engagement and information which is hopefully at a very high level.
Ali?
I suppose I'd just add to that. I mean, I know we're going to come on to that potentially, but a submission followed by a face-to-face meeting to put the data in the submission into context is always very useful. The other thing I would say is we don't get enough loss triangles. I think it's important to actually use a development pattern of the insured rather than a generic pattern. They've done all this work. They should have the benefit, if they've actually improved their risk, of having their own loss pattern used. We don't often get loss triangles. And specific to rail, from our perspective, information about aggregation. So all the information about who's operating the system, who's dispatching the trains, who's riding additionally on the system, who's maintaining it, etc. Just so we know all the players and how they fit into each other and how their contracts work to limit liability. So hold harmlesses, knocks for knocks. All that stuff is very important to us when we're looking at holistically a large rail book and how all the interactions work together.
Yeah, and I think to that point from Ali, which is like, great points. Typically underwriters ask for the same things, and I think the brokers and the clients should kind of know and be able to, before we are even asking for those things, be delivering it to us. Because I think maybe a few years ago, historically, there was like a view that if we give underwriters less information, we'll get a better price. I think the absolute converse is true. The more information you get as an underwriter, the more comfortable you can become with a risk. And rather than asking about the contractual protections or whatever kind of indemnification language you have with certain people you do business with, why we're just provided with all this information up front in a transparent, honest way, and then you'll probably reap the reward with a better deal.
That's obviously points well made, and I guess that sort of in tandem, kind of what makes a good presentation, but also ultimately in my notes here, how can underwriters make brokers' clients' role easier in all of this? How do we get the best outcome, I guess is what I'm saying.
I'll take the presentation bit, and maybe Ali can do the best outcome part. So I think obviously, lockdowns, COVID, lacking of traveling has been pretty bad in general, in terms of we always think as a market, the ability to kind of transact face to face and see clients face to face is really important, and building that rapport is really important. But the one benefit of it is, I think we've been able to, you've been able to zoom in to the calls, or other experts for 5-10 minutes around certain aspects. You might get, rather than just having the risk manager turn up to London, you might get a safety person or a technical person. You've been able to get a broader array of, I suppose, the insured talent base to present to us. And I think that has been incredibly useful, because we're only asking for like 10 minutes of their time rather than 3 days of their time. And I wouldn't want that to stop. I think that's been such a benefit. And I think we have learned so much more around clients across the spectrum of industries we obviously operate in over the last 2 years, because we've had those like industry experts or that specific subject matter expert being able to dial in. And I think whilst we obviously want to see our clients face to face and we want to build that rapport, I think we could look to kind of operate on some sort of hybrid model, which we're seeing recently at the moment, where you kind of have a group presentation with all the experts maybe a few weeks beforehand, and then you have kind of a one-on-one individually in London. And we kind of that's like a nice learning from like what we've been through over the last couple of years. And I think it would be a shame if we let that pass.
Thank you. Ali?
I suppose I'll just add to that. I think one of the key parts of giving a good presentation is speaking to your broker in advance and figuring out the hot topics, because we're quite boring as underwriters. We tend to repeat ourselves and ask the same questions. So if you talk to your broker and prepare, then there's less takeaways, there's more engagement during the actual presentation itself. Other thing, I completely agree with Ed about the subject matter experts on the phone and the hybrid model. Hopefully going forward we'll get the best of both worlds. One thing I've also found useful is recording of presentations, because often you get a lot of technical detail in a presentation, you can't always absorb it all, but playing back the presentation I found very useful to make sure I completely understand what I've been told, especially as we're getting more subject matter experts who are talking in very technical language that we want to hear, but sometimes our little underwriter brains need a while to catch up on it. And the other thing I just say, ESG and sustainability, very focused on that. Really want to hear what our clients are doing, and also want to share what we're doing internally with our clients. That's an important part of presentations and something a lot of our clients are including.
Would you agree with that, Ed?
Yeah, I think ESG is to one of
specifically ESG, obviously, is what I meant.
Yeah, I think ESG is obviously a hot topic, and I think to what Ali was saying around talking to a broker beforehand, I think people are, and we are starting to get information about that, just as we were getting information around COVID a couple of years ago, and just a few years back we were talking about PTC for railroads. There are hot topics, and that hot topic seems to go every single rotate annually. I suppose my only fear as an underwriter is, what am I going to ask if the hot topics are all covered in the presentation? I might run out of questions. But I think to your other point, Philip, I think that it's important that underwriters do try and help clients as much as possible. It's not a one-way relationship. I think we need to understand client need more and be more client-centric. I think over the last few years, underwriters across the kind of market have probably navel gazed a bit and worried too much about what's happening in their companies, their books, their performance. How can we exclude X, Y, and Z, rather than thinking, what do our clients need? How can we help our clients? What do our brokers need? How can we help our brokers? I mean, depending on who you deem your client, whether it's the end insured or your broker. And that's I see that's our job as underwriters. Okay, we need to underwrite and do things, but fundamentally we are trying to partner with clients and build sustainable relationships where they're transferring risk to us for hopefully a reasonable premium with reasonable coverage. And I think people have lost sight of that over the last few years. I think everyone's looked too quick to exclude too much. And I think as underwriters, we need to strike a better balance with brokers and clients, and understand what's causing them sleepless nights, rather than always worrying about what causes us sleepless nights.
Great, thank you. I'm sort of looking at the time here. I don't know if I'm going to be cut off all of a sudden, but I think really what I just wanted to summarize, thank you very much to both of you today. I know it's been a rather quick session, but as we were warned, the time flies. I think to summarize, it is a challenging world. The last 2 years have been unbelievable, as evidenced by being on another Zoom call today. and not presenting in front of an audience and actually seeing people face to face. Claims go up, nuclear verdicts. It's a difficult world, but you guys are there to underwrite it. I think you've touched on those points. But I think my also takeaway is, as a broker, is that you definitely still put a very high place on meeting the clients face to face, really forming that relationship, hopefully in the long term, and having those clients in the long term and being there for them when they have claims.
Yeah, great, thank you.
Any final comments from Ed and Alison?
Thank you very much for organising this event, Enya. It's definitely good to kind of reach out and talk about transportation, because that's a big part of our book. So very, very pleased to be part of the panel.
Thank you, Ali. Ed?
Yeah, no, thank you for organising, and for those who were listening to us prattle on, thank you for doing that. I hope you found it informative.
Again, thank you, Philip. Thank you, Ali. Thank you, Ed, for your insight. And one key word I can take away is partnership. Lloyd is partnership with all of you. So thank all of you for staying with us, and we'll see you next time. We'll be at RIMS conference in San Francisco. If you are attending RIMS, join us at Lloyd's Lounge. If not, join us for our RIMS Live. Until then, stay healthy, stay connected. Thank you again, everyone.